G'day everyone, welcome back to Pete's Investing. It's May 22nd, 2023. This is the NIKKEI Japanese market update. On our weekly chart here, you can see we're in a bullish momentum on the CCI and moving averages of the price chart. Likewise on the daily, it's just broken down from a bullish momentum into a neutral positioning. So looking at that more closely, again you can see there our triple moving average on the price chart. Moving averages 3, 5 and 60 in an upswing. Although we do pay attention to the CCI 150 moving average 5 and 50, also in an upswing there, and that's giving us this bullish signal. Notice here I've included the awesome oscillator. It's also increasing, so it's a positive in terms of the weekly status. On the daily though, same indicators, but you'll notice the CCI is broken down through its initial moving average 50. So that's a weakening sign. So just be mindful of that. We've made some nice highs recently. If I zoom out, actually pretty much level pegging with where we were back in September 21. But notice also we've got these diagonal lines, trend lines. We have to respect, and it may come back and gravitate towards these possibly. And it actually did break through this 29,239 resistance area more recently in the last week or two. On the hourly chart, got a couple of things to show you here. We've got the this divergence on the CCI, a bearish divergence versus a bullish divergence on the price chart, and then I've drawn this channel in that range where that divergence happened, and it's broken through that to the bottom of that channel. So the way you'd probably trade this, if you want to go potentially against the major trend, that'll be an initial target in that range of between the 23 and the 38% Fibonacci retracement level between that high and that more recent low, and that sort of coincides with the daily as well. Remember we said the daily CCI is breaking down. You can see it more clearly on the hourly chart. So when it breaks down through the channel in line with the CCI moving bearish, that's again a sign that it may come down and potentially break through this target area, or it may even bounce from there somewhere. So just be mindful of that if you're going to trade this. So if you're going, I wouldn't be going long at this point until both weekly and daily started showing more positive movement and it breaks above these recent highs. So also at the top here I've got this back test, and that shows long positioning only. You'll notice here is a bit of a drawdown of your profitability in that area. Notice where the price went against you if you're going long. And then we had a couple of other drawdowns in these areas here, again when the price fell against you. The way to avoid these drawdowns is you only trade in the direction of the weekly and daily trend, as I said. So for example, back here in November 21, you can see there, November 21, there was a neutral signal initially on the weekly, then a bearish signal. So you would have avoided going long, avoided these trades if you followed the weekly and the daily. Again, looking at if I zoom out, look at the November 21 period, which is back here. Again, notice there were a couple of long trades signals, but again that would have been against your weekly trend. So again, always follow the weekly and daily trend to make sure they're both aligned before going long or short. To understand how to trade this and other trading strategies, reference the links in the description below. To subscribe to my Patreon page where we do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.